So guys, welcome back to my channel. In this particular video, I'm going to be discussing some key terminologies you need to be very conversant with in Forex. So basically, I'm going to be discussing the trend of the market, time frame, P, lot size, bid, and mark spread, long versus short, base currency. Those are called currency, right? So what is the trend of the market? Every market has three directions. It's either an uptrend or a downtrend. A zigzag in the form of upward movement, where we seem to follow the higher low and at the same time a high high. This means that the new low is higher than the previous low, and the new high is higher than the previous high. And if it's on the downtrend, it means it's going to form what we call a low low and a lower high. The previous low is much more lower than the new low. If you look at this previous low, this is a new low, this is lower than it. I'm going to quickly show that show you that on the chart right now. If you look at this chart right now, you're seeing that this is the beginning of this is an uptrend where we have this low. This low is higher than this low, and this low here is also higher than this low. And this high, this is an high greater than this high. And if you go here, you'll find out that this is a signal of a downtrend where we have a low here and a low. So this low is lower than this, it means a lower low. And we are looking at this high. This particular high is lower than this high. So basically, that is the first two directions you can see on any currency pair. The third is sideways. It means that the market is moving between two certain value. You can't really say if it is a lower low or a higher high. So you can't really say if it's an uptrend or a downtrend. I'm going to be showing that a trend on the chart right now. If you look at this area, we are seeing that after the transformation that we are on a downtrend, you can't really confirm if it's trying to go an uptrend. So this is basically a sideways movement. So basically for beginners, I do advise stay off the market, do not trade. But if you are a trader, I would say stay, do not trade, but study the market. It could be a signal or it could be an accumulator phase where the next thing that will happen is a markup, or a distribution phase where the next thing that will happen is a downtrend. So basically, what are we saying about time frames? Time frame refers to duration where we used to view different price movement on the chart. So when we have M1, M5, 15, basically this represents 1 minute. It means that every frame here is within 1 minute. Take for instance, this starting with every bar frame row is from below 30 minutes. And we have 1 hour. Every bar frame here is formed within 1 hour. And every bar frame here on the daily time frame, every bar frame here is formed within what? On the daily time frame. Say W1 is every bar frame here is formed on the weekly or every week and monthly. In order to be sure of the direction of the market, please always ensure you go on the right time frame. If you look at this currency, USDJPY, we are on a downtrend. If you go on the lower time frame, you believe that you are what? Systematically on the uptrend. These were some of the mistakes I made when I started trading. I felt always so, but these days I go on the higher time frame and I use my other time frame to make confirmation. I also trade between 1 hour and 4 hours, so I don't actually use the smaller time frame. So the higher time frame does win. So much for time frame. When we call lot size, let me give you a good example. If you go to the market, you want to buy a phone of the same brand, different specification is going to cost you different numbers. So basically, lot size tells you the amount of money you are using to trade a particular currency pair. So we have the starting lots, the medium lots, and the micro lots. Every beginner is advised to go trade, use the micro lot. And the example is if I'm trading 0.0 of USDJPY, it means that I'm trading just $1,000. And if it is in pounds, I think depending on the currency exchange, that will be around 1.59 pounds. If it's in naira, it will be 1,590 naira that I'm going to use to trade 1,000 USD. So basically, The lot size, the higher the lot size, the higher your profit and the higher your loss. The smaller the lot size, the higher your profit and the lower the loss. So having said that, I will be looking at access spread. Big is basically every broker has this. Big is basically referring to the price. The bid price refers to the price your broker you can buy a particular currency pair. Sorry, it refers to the price you can sell a particular currency pair. It comes first, so it's called the sell price. And the ask price is basically referring to the price you can buy a currency pair and score the buy price. The difference between the sell and bid price is called spread, and that's where your broker makes money. If you are looking at this example, this person is on a 50 lot size. So definitely, if you lose money, it's going to lose money. If you lose this money, it will be multiplied times 32 pips to tell me the amount of money that he was going to lose on his account. So basically, your brokers make money on you if you lose through your bid and ask price. And that's why I majorly advise people trade the major currency pair. Their spread is very, very low. Instead of trading the cross pair or minor pair. So what do you mean by long and short position? We're going to be wearing that. Long position means I'm buying the currency pair when it has a very small value and I can sell it at a higher price and make money. While short position means I'm selling a currency pair, expecting it to fall. When it falls to a certain value, I can buy back. I make my profit. So basically, no other definition to it. The long position means I'm buying, and short position means I'm selling. Obviously, the base and close currency. Every currency pair has two currency. One is called the base currency. I'm using this as an example. Euro USD. Euro is the base currency, and Euro is the base currency, and USD is the close currency. In this example, it tells me that if the value of USD is 1.400, it signals that I need 1.400 USD dollar to buy 1 euro. And if the euro strengthens by 10 pips, I make profit. And if the falls, maybe by 10 pips, I a profit, I lose 10 pips. So there is no other thing to it than just realizing that every you will find it on your chart. The base currency comes first and the quote currency comes last. Guys, thank you for watching my channel. I hope you'll be able to learn some key terminologies on the forex market. I hope to see you again. If you like this channel, kindly subscribe